The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour on this very interesting session. Dow down 278 points at 17,827. S&P's down 25 at 2,079. You got the comp index down 78 at 49.28. You got the gold up 6 at 12.04. Silver's up a little bit. No, silver's down a little bit. You got high-grade copper at 277. Hey, this is very interesting. Crude oil is down, and bonds, the TLT, is up only 35 cents at 130.31. This is going to be a very interesting scenario. And let's see, move this away. And what do we get? We've got the dollar, which is up about 19 cents at 97.80. Oh, what an interesting market. And what an interesting day. You've had 3 hours. You had John Logan, fabulous presentation there using his TAS software system. And you've got Steve Rhodes going through all these different techniques and also his timing model, a nice turnaround based on his model. Hey, then you got Tom O'Brien. Tom must have given an absolutely fabulous options webinar. Just when was it? 2 nights ago, I think it was, and discussing the very trades that he was putting on and had put on, and I believe there must have been terrific trades. And he was with Daryl Martin. Daryl just showed us his trade, just a real quick trade, fabulous gains that he made. A lot of interesting things going on and a lot of information here at TFNN. I hope I can provide the same for you. So let's just go through this. Here's the E-mini down 27 at 2,073. It made a peak D. What do you want in the Chapman wave methodology? What is the crux of the formations? What is the Chapman wave methodology all about? How did I find it in the first place, and how did I investigate, and then through discovery and error, a lot of error, did I find out that 7 waves is really the most important thing. You want to go to the 7th wave, which will be a peak 7. And then I decided, it was at a time when Robert Prechter was all over the news with Elliott wave, and I didn't quite understand it. As much as I tried to understand it, it was really, there were just too many options on the plate. And I said, my system is so simple. I don't want to get into all the numbers and everything. I'm going to make it simple. On the way up, we'll call it uppercase A, B, C, D, E. I found out you can go to an F and a G, and then that's it. There are no H's. You have to find out where you either went wrong in your count, or it is recycled, and that G has really become a brand new B, or something like that, and you've recycled and you're already on your way up. So when I went through the different formations, this is when I was still hand charting, I said, look, find the most identifiable lowest low bar. And this is what I've typed in here. If you want to make a copy of that, that's great. And then within that, you go to a first leg up. That's just your first leg. There are technicals and patterns that you look for that would confirm that you've gone from a buy signal to a buy mode. In this case, probably I'd say a buy mode was 1 penny above peak B. But it should take you, if that's the case, from a buy signal to a buy mode, it should take you to at least 4 higher peaks to a peak D. And at that point, I always put a plus sign, because other things can happen. A lot also depends on your left side, where you've come from. You know, for those of you who use the Fibonacci expansion, or let's put it this way, for those of you who use the A to B equals C to D, or looking at the patterns that have been discussed by Larry Pesavento, the formulas of the butterfly and the Gartley, and then Tom expanded that with his tiger butterfly, where the expansion goes through with volume, or tiger Gartley that goes through with volume gives you the butterfly. Well, most importantly, what I'm looking at here is that if you've come from a much high bar to start the new buy signal at the bottom, That's all called a retracement failure mode. This is Technical Friday, so I'm going through this a little bit more in depth. And what I'd be looking at is that if there's a left side Grand Canyon cascade to the downside, it takes a while to build up enough energy, and it can fail at any time. You can get pooped, you can get, just you slip on a rock or whatever it is. It's difficult. If this downtrend started down here, then this would all be not just recovery highs, it could even be all-time highs. That's different. At that point, when you've gone to an A and a B, you can expect you're going to go to a C and a D. And I'm going to discuss some of that now when we look at, in a little while, when we look at the New York Stock Exchange. Now look at this. 4 peaks and then you pull back. It's at that point that you can get a whole bunch of things. You can get a sharp decline in price. You can get a sideways decline that uses up time rather than price before going higher. Or you can start to recycle back up. I call it a recycle, where there's what I call an instant restart. That's the best way. If you are still looking bullishly at whatever you're looking at or trading. Because if you go within 3 bars to a leg E, it becomes an E/A. You've got an alternate count. Besides being very bullish short term, it becomes very bullish intermediate term, because that can recycle all the way to another D. But very often, the instant restart recycles to an E or an F. So it is extraordinarily positive. Just that one technique, which took some time and money to figure out. All right, let's get rid of this right now. Let's move it away. Whoops, you're out there. And let's look at this E-mini chart again. Here's another technique that took me a long time to discover, that you can get double tops fractionally underneath the previous left side high. And if the technicals are failing, you've got to be prepared. The whole thing about this is preparation and knowledge. You've got to be prepared that this could fail, and you make a peak C1 and a C2 slightly low. You remember we used to get calls from Peter about the currencies, and I discovered as we were talking, this was maybe 2 years ago, a year and a half, about 2 years ago, that the euro-dollar currency pair had started to make this pattern that I had identified many years ago as peak D failures, and I didn't know how to describe it. And because it was a failure pattern just underneath the previous high, I said to myself, there must be a way of notating this, and I decided to call it a peak C1, capital C1, and then a capital C2. And then I'd put a plus sign over the C2. I'd never put a down arrow because it wasn't an official Chapman wave sell signal. Buy signals go to buy modes. Buy modes conclude with a sell signal. That sell signal can go to a sell mode, but it can also just go sideways and then reactivate. So now I don't want to, if the eyes are starting to glaze over, let me just make this real clear. The E-minis went to a peak at 2109.75 the week of the 27th of February in the weekly chart. Pulls back, goes all the way down to 2030, then rallies back to where? 2107.00. That's 2 3/4 points just below the previous high. Or when you're talking about 2,000 points, missing by 1% is not such a big deal. So I call that a C2 when it started to fall. Yesterday, at the end of the day, when I was looking at all the charts, I said to myself, this is incredible. The E-minis, the S&P E-minis and the S&P gave me leg D. Only the Dow went to a C. The New York Stock Exchange, the NYSE, the big New York Stock Exchange index, went to an E. Everything about what I was looking at, the VIX pulled back and then came off the bottom. Everything I was looking at went to the 1.18 level I spoke about for my subscribers to my opening call. And I said, hey, that's kind of, I even said the day before, if it gets to 118, I might want to buy it there. This is not the VIX itself. This is one of the derivatives, one of the trading vehicles. Hey, all of a sudden, I said to myself, I think I'm getting sell signals here, even if it's just shorter term. Why? Shorter term, because some of the monthly charts were still acting very well. Some of the weekly charts were acting well. And even some of the daily charts technically had some good technical indications. But the Chapman wave had given the leg that I needed. Let me explain what I'm talking about. Here is peak C1, C2, and we've declined. We haven't even made a peak C3 yet. We might do that next week if we do not go above 2105.50, which was the high yesterday. You've got peak C1, C2, C3. Now, what happens in a situation like this is you've actually usurped a tremendous amount of energy to the upside, failing to make a new high. But wait a minute, you've also usurped enough energy in the enough weakness to say that some of that weakness has been alleviated because you did run up and you've now pulled back. Basically, you've set up a trading range. And that says in this trading range, you might not drop all that much further from here. We don't know yet. But I found for my subscribers that we had just so many potential shorts showing up. I showed charts of some that dropped. We didn't have them. They dropped as I was talking about. This is what I would like to short. But we do have some shorts that are working very well. And basically, I found that the bias now was more leaning, although we've still got longs, the bias was leaning towards the short side. And that's the way we've got to look at it. Where are the majority of stocks positioned? And there is another technique that I use. I use it just for reference. I really don't use it much for trading. How do you look at the, let's go to the SPX.X. Look at this. Look at all those resistance points. You don't even have to know what this is. You see all those numbers at the high of the price? See all those numbers as a cluster over there? You see all those numbers here? Let me explain what it is. This is what I had set up for me. Oh, maybe I think it's now about 8 years, and it is a series. This is not what John Logan uses. He uses completely different techniques, but the result is that you set up a whole framework that says within these boundaries, you've got tremendous resistance. If you break above it, that's very positive. If you remain under it, that's your boundary. Now look at that's your boundary on the upside. Then your boundary support. Look, 2049 on the downside, way down there. I don't have anything on the shorter term, but I do have 2081. What am I looking at? I'm looking at the S&P. So this is the daily. It says at 2107.78 and 2106.63, tremendous resistance. Where did it go to? It went to 2111.91. It didn't close there. It closed at 2106. It couldn't close in that area. Look at that resistance. Look at this, 2122 to 2113. That's in the weekly chart. We haven't got there yet. We did get there before. The high was 2117. This is 2122. Look at the 120-minute chart, all those resistance, and we broke under the 2081.91 level. I'll be right back. Basil Chapman, Tiger Technicians Hour, Friday, Technical Friday on the Chapman Wave, and we'll go through more of these technicals when we return.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back, and a couple of things here during the break. I was asked a couple of questions, and very nice. These are salient questions. Also, an email. What about Netflix? Let me just say that, as far as Netflix is concerned, allow this spike, this gap up spike, to conclude. I'm using a phantom peak, using the phantom peak to be a little bit more conservative. I'd say that it's in leg C. There's a little bit more residual strength. And then I would not be surprised if there is a pullback, but that pullback could just be in fact, what could happen is that you're seeing the high, and that it could start to move from the 569 level to under the 530 round number low over a period of 3 weeks or 4 weeks. I'd say 4 weeks. And at some point between 550 and maybe 510, somewhere around there, that's 10%, 12% correction, you will see another rally and then lower lows and lower highs. I believe, just from the analysis of the chart, that the move yesterday was both short covering plus new buying, but most importantly, it extends the price beyond what I would consider based on both the monthly and the weekly charts to be a level where support can hold for a lengthy period. So in sum, I would not be shorting it now, but I would consider some kind of a put option in the 550 area for April, May, June. I'd probably even send it out to July for July, and it would be if Netflix can pop. 575 was the high, round number high today, but I'm calling it legacy just for the moment, and 558 was a round number low. This is really close. It's within days of starting a pullback, but it's not the perfect short position because there are still people that haven't covered their shorts. I bet it was just too quick yesterday and too quick today. It'll probably go into Tuesday. I would say by Tuesday of next week, you could set up an option position, a put option. I would rather do it that way with a small amount of money than to go shorting at 569 when you're only expecting it at 10 or 12%. There are many stocks that can give you that without the capital outlay. Okay, that's enough with that. Next question was Berkshire Hathaway. Now, you might remember I used Berkshire Hathaway. I've always had the utmost respect for the way Buffett has managed his companies. And what I've said is that unlike most fund managers or even these great hedge fund managers who have bought equity in the company, Buffett owns the company most of the time. And within owning the company means he has to see that the company is managed. He doesn't know anything about the stock. All he knows is he has to manage that company. So as one of the great building blocks and one of the great purveyors of the concept that the formation of a company and the growth of a company should be translated, in effect, to the price of the company in the stock market. I think that Buffett, with or without all the political connections, because you know my opinion is that what his fund manager did, or whatever the guy was, based on what he said when he had a particular stock and he kept on nudging Buffett to have a look at the stock. He didn't say to buy it. He wanted him to look at it. That was absolutely a conflict of interest to me. And with that said, what you're looking at is a situation that Buffett has all the leverage. He never, ever got hauled over the coals. He's the boss because he has the money, and it's just real simple. But he's done the transactions. Look, Berkshire Hathaway's been, even today at 140, it's split 10 for 1 or some amazing thing. This is just one of the great companies on the stock market, let alone one of the great stocks on the stock market, let alone a great company. So with that said, Berkshire Hathaway B shares we're looking at made a peak G/C in the monthly chart, and the month is only halfway through. And what we're looking at is the MACD is just starting to turn down and cross negative, but we've still got, a week and a half or 2 weeks to go, and the stochastic's still at 83%. But you remember that trend line that I drew in, and what I'd said is that stalk leg, body leg, body, neck formation, and that says Berkshire Hathaway, there's a good chance that Berkshire Hathaway is in the process of making a really big consolidation. Now I want to talk about it in terms of the mini recession I've been talking about. Basil Chapman, I'll be right back. See you in a moment.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, before I forget, and then it's noon and we go to Nico and Paige, I just want to do review. Look, we've got the lowest low bar, and what you look for is each successively higher peak. I label them uppercase A, B, C, D. It can go to an E, F, and a G. That's not the issue. The issue is D is your objective. Well, this is the pattern that you're looking for. Look, before I go back to Berkshire Hathaway, this is the Dow Jones United Kingdom Stock Index. So it looks exactly like the actual index itself, but it's based on the Dow Jones criteria. D, it made in. This is one of the reasons why I wanted to go short today, more than we were already short. And the reason being is that if there is a peak D here, even though stochastics at 88% and the MACD was good, the way the volatility within the pattern itself says it's almost like an A to B equals C to D. That's the difference. Remember, that's the lightning rod that we look at, the other technique. And this particular technique said that if there is a peak D today, we could be pulling back quite a bit sharper. Why? Because there's also a D in the weekly chart of the basically British, the FTSE 100, but in this case, it's the Dow Jones makeup. Look what happens if I go to the DEDOW. The German DAX went to a peak F with a right arm extension with fading technicals. Kaplop, look at that, down 2.54%. This is serious stuff. Also in leg D. Is that a peak D or leg D? No, I think it's 432.83, 432.99 by a fraction this week. It went to a higher. So it's only leg D. It might not be a peak D, but next week's going to be real tough to break the highs of this past week. So, and it's in the monthly, it could be D/A, and I have to give preference, at least for now, to D. This is serious stuff. Look at the Nikkei. This is the continuous contract. That's an alternate count. That's a G/C. So we're just beginning a pullback there. We'll see what that is. But it still says technically, look at the technicals failing at that rally. This is not good. And it's recycled in the weekly. I've got a C. So that looks kind of more positive, and the same thing in the monthly. So, hey, this is serious stuff. Look at the FXI. And the FXI has gone to a leg F yesterday at 52.56. Kaplop, it comes down today, and that makes a peak F. And it's a G/C in the monthly. And this is the reason why I want you to go back to the Berkshire Hathaway. You see this trend line, you see this Chapman wave inside track resistance area. Look where the FXI, the FTSE China 25 ETF pulled back. Now let's go back to Berkshire Hathaway. BRK.B. But you got to type it in the right place. Right there. BRK.B. And we're going to see each one of these little rallies in the market that have started, they're just not working today so far, with the Dow down 254. I know it's options expiration. Yesterday was perfect. Yesterday was like the perfect Friday. You open up, you go down sharply. Then you come all the way back and you rally sharply, and then you close almost unchanged. Perfect. You wipe out the calls, you wipe out the puts, you get the premium out. You can start fresh in a day like this. So now what we're looking at is Berkshire Hathaway has that up channel inside track right there. Now the weekly chart, look at this. What did it make? It made a peak, not a D, but an E in the weekly chart at 152.94. It went sideways. Those sideways can drive you mad, those sideways consolidations, until whoop, it breaks down. And now that 9-period moving average, that black line that was just the most except for that one sharp drop, it was just the most amazing support line all the way through from the breakout back in February of 2014 to right there, to the last week or so of December. Look at that. Is that January? I'm sorry, that could be January. The last week of January. And now the 9-period exponential moving average is acting as strong resistance at 144.25. So that's that. And now what's happened is that the MACD and stochastic are still very poor. Now let's go to the daily. The daily made that peak D. You remember that I'd spoken about this because I talked about it. And I said, here's that cup formation that we often talk about as the double top drop bucket formation. What happens is the backhoe comes in, picks up all the gravel, lifts it up as if it's going to put it into the truck, and then woof, opens the chute, and all the gravel and whatever it is comes out. And that's exactly what happens. All it is the dreaded H upside down, the lowercase h upside down, like an inverted Y. Double top formation, 152.94. Now, what's really important about this is that look how long it's taken every single rally to fail, so that that 9-period exponential moving average, that black line there, is saying, this is not good. And then out of the blue, something that hadn't even been touched for, let me see, when last was the 200-period exponential moving average? There you are, back in February the 5th of 2014 at 108.12. Look at that. It went to, what did I say it was? 145 or something. It went up 50%. Now, all of a sudden, what you've got is that you've got your rally that went from the 200-period moving average, and it went on for exactly 1 year. And then we're testing. Well, not exactly a year. It went to a little bit more than a little under a year. Now what we've got is the 200 period has just been hit at 140.83. But wait a minute. That's not the story. The story is that you've got the 200 period simple moving average crossing above. And that says that there's a real good chance that Berkshire Hathaway needs a little more time and that we might go down to the 137s, but the 140 area is going to be a fulcrum over the next 4 months as it tries to go above, fails, comes back down, and that becomes either a repellent zone or a magnet and a propellant zone. This line at 140 is going to become really important over the coming, I'd even say 3 to 4 weeks, because it's going to set up the stage for the rest of for a good part of the summer. All right, question of the day. Basil, for financials to take the lead, Berkshire will have to eventually be revived. Should we expect leg D or E in the monthly sometime 2015, or could this be the end of the road? No, I'm looking at this, and technically I'm suggesting to you that this pullback has a real good chance of going to the 137, 135 area. And that's going to be the big test. But it's when Berkshire Hathaway has completed its consolidation, that the XLF, which is down quite sharply. Look at this, folks. Remember, let me just show you this chart. I don't know. I'm going to show it to you. I'm going to be really persistent about this. This is the Chapman Wave methodology. Takes you to A, B, C, and D. At D, that's where big things can happen. Whoops, let's move it away. What did we just get? You remember I spoke to you about the peak C1, C2? There's that peak C1, C2. It hit it twice at 24.78 in the XLF, the S&P Select Financial Spider Fund. Pulls back sharply, starts a brand new ABC, and what does it do? It goes to a D, and we've got the sharpest decline at that peak D, and the stochastic and MACD are way below where they were before. So I suspect we're going to see, if I'm correct, that we've started some kind of a move that has some time, but it probably has price involved. Then we're looking at the low that was made recently on the 26th of March of 2378 being tested. If that's taken out, then you've got your two moving averages. You see that one there, the 200 period simple moving average, and my favorite, the 200 period exponential moving average at 2363. That whole area becomes an important support area. That's where we're going to see where's Berkshire, where the best of the best in the financials. So let me go back to what I was saying before. Now we've only got perhaps an alternate count EC. Let me just make it clear here. This should be E/C in Goldman Sachs. And Goldman Sachs has gone recycled in the weekly, in the monthly. I'm going to call it either a C or a B in the monthly, and that tells me I believe that I'm correct in saying that later in the year we can have a spectacular rally. But boy, we've got to get this consolidation done first before we can get it. And what if the rally is spectacular, but it comes from much lower down? We don't know. So we're going to watch this real closely. So let me go back to Berkshire. That was the question. So Berkshire itself, being in all these different areas, insurance, banks, it's just in everything, furniture, you name it. The reason why I had said I'm suspicious of what's going on about 3 weeks ago when I was interviewed by Tom, I said to my subscribers, I think we're in a mini recession. I don't know, because you only get the economists only talk about the data much later on when it's history. But we're in the middle of it, I said. I think we're into a few weeks of it already. And there were a number of reasons. One was a uniform company, overalls and uniforms. Another one was Berkshire was part of it. The way the home builders were acting. A bunch of things said to me, there's a real good chance that we are in a mini recession. And the RTH, I didn't have a chance to spend so much time on it last night, but I just didn't have a chance this morning to discuss it for my subscribers. They used to have a beautiful inversion of the RTH. It was a short. Ages ago, they just took it off because the RTH has just been going up and up and up. Now that they have no inverted, if someone can find it, let me know. Even 100% short, the retail market vectors retail ETF, let me know. It's got Walmart, Home Depot, Amazon, CVS, Target, just a whole bunch of things, Bed Bath & Beyond, Staples. So let me know. Look at this move down. And that started way back in March. I think that we're in a mini recession right now. Hey, I want to go to Marvin in Orlando. Marvin, how are you?
Hi, thank you, Basil, for taking my call.
My pleasure.
I wanted to see if you could just touch on the euro, see if it's going to roll over again, and the other question was on oil. You think it's going to roll over as well?
Okay, couple of very salient points you're making there. You've spoken about the euro and you've spoken about oil, and I would also include other commodities within that category, because a lot depends on the dollar. Now, it looks to me, and I said this about 4 weeks, how long ago was it? I said that I think that the Fed is going to be talking, they might be talking about rates, but you remember I spoke about the magician who has the left hand waving like this, but it's the right hand, the guy who plays those, what's the 3-card Monte, whatever it is. The left hand is not what you've got to be looking at. It's purely politics. It's like when a politician says, I will not, you immediately must say, he is saying, I will. When he says, I will, you've got to say, it means he will not. And that's exactly the same. The Fed was waving their hands at the yields. I said, no, we've got to focus on the dollar. I think it's the dollar that they're going to be trying to latch onto. Well, the dollar is in a consolidation. And if I had to put it together with the TLT, which are the bonds, whoops, where did it go to? Also in a consolidation. And until they break significantly, until the TLT starts to trade in the 127 to 126 area or 133 to 135 area, it's in a trading band. And until the dollar itself really takes out on the upside the 100.39, let's say 101.50 to 103 area, or on the downside 96 to 94, it's just stuck in this range. So I believe that if you're looking at crude oil at this particular point, to say the USO is in leg C, probably peak C today, but the pattern that I drew a long time ago of the arch formation that turns into an M formation, a lowercase m, I think that that's valid. I have not yet seen anything that says that that is not a chart pattern that has more significance than the U-shaped cup pattern with a breakout to the upside. I think there's still a glut of oil, and if I'm correct about some kind of a mini recession here, that would also say there's a slowdown in the buying of oil. So to answer your question, EU, is this as a trade that you're looking at, or is it just a kind of a general question?
Yeah, I wanted to see if I could buy if it rolled over again, maybe around the $50 range on the WTI.
Okay. So, let me just do this. I'm going to go right now to your first question. And the EUO, which is the pro shares of ultra short euro, I'm going to have to go to the euro pair to give you a better design pattern. You see, if you're looking at the euro, the whole thing about the euro looks like it's got that H, lowercase h, that could go to an M pattern in the daily. The weekly has barely, it hasn't even broken above the 9-period exponential moving average. So this week, coming week, is going to be really important. If the euro is able to break into the 111 area, and right now it's at 1.07, that's a different thing altogether. That says, okay, now you can start the first pretty decent arch formation. So, you know what I'd like to do? Are you able to hold on?
Sure.
Okay, because I'd like to give you specific parameters and the way I'd be looking at it as a trade in these particular instruments. I'll be right back with Marvin in Orlando, Basil Chapman. Dow's down 254, S&P's down 22, and I'll be back on the 17th day of April.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. So what I've got here is the chart of the EUO, which is the ProShares Ultra Short Euro. The pattern I'm looking at here, let me just get this, because everything there worked out pattern-wise. Now we've got a much larger pattern, and this suggests that there's an arch formation, and the arch formation will test on the upside a break of it's at 26.75. If for whatever reason next week it breaks above 27.88, that would be very positive and suggest it's going to retest the highs of 28.58 back on the 13th of March. If it rallies like that, the euro's going down. But the pattern it says suggests that the H pattern is forming right here, and that if it takes out 26.38, somewhere around 26.30s, there's a real good chance it's going to test the low of 25.53. So that's one of the trades that I'd be looking at, is that the EUO over the weekend on Sunday night, if the euro is starting to rally, you'll see this pull back. And if at Monday at the opening it takes out the low of yesterday, that was 26.55, there's a real good chance it's going to go lower, and that you're going to be seeing the euro itself start to rally. And that would suggest the same pattern the right way around, is that the larger arch formation with a peak C1, C2 in the euro dollar daily is trying to rally, and there should be an M-shaped formation in the MACD, which suggests that there could be a bit of a bounce, and that bounce says that if it was to take out today's high on Monday morning, there's a good chance the euro will rally as the dollar starts to pull back. And the dollar's got the second cup formation, and it did hold support this morning, but if it has any weakness at all, you'll see it come down. And then if it comes down, the big thing is, does it test the 96.33 to 96.17? Yeah, 96.17 level, which have been the most recent support levels in the dollar index. And just to add something else, the XLE, talking about peak Ds, it made a peak D once back in February, pulls back, and the Energy Select Spider Fund has gone to a leg D doji candle yesterday, right on the 200-period exponential moving average. That suggests that first it becomes a repellent with 80.74 is the support to watch, and then it becomes a magnet. And even if it goes up higher towards the 85.53 level, no, that's way too high. Towards the 83.60 to the 84.20 area, that at some point it's coming back to the 200-period moving average. So those are the parameters I'd be looking at. So if you see a move over the weekend on Sunday night, says that the euro is starting to strengthen and the dollar's pulling back, you've got yourself a trade, because the euro, the EUO should be coming back down, and the euro should then be rallying. If it's the other way around, then you've got to say, uh-oh, dollar's just stuck, and dollar's got some strength. I don't want to fight the dollar strength. Does that help you a little bit?
Yes, thank you.
Okay, and the only other thing is that on the weekly charts, the XLE is doing the same thing. It's got the H pattern, and the crude oil, that was a question of yours, is also making the same formation. I do expect you could get a leg D, and then it pulls back. Crude oil is at 57 right now. Hope that helps you, Marvin.
All right, thank you, Basil.
Thank you very much for calling. So, okay, now let's just do this before you go to Nico and whoops, let me just move it. Nico and Paige for All About Health. Let me just do this. The VIX index is up. It's not up huge. It's up. It's the close today that is going to be important. Remember I was talking about this yesterday? I said, wow, this is going to be an important Friday close. If the VIX closes towards its high, towards, instead of 1415, is close to 1450 or higher, that's going to be very important for next week. If it suddenly pulls back to 1361, says, hey, just sideways consolidation. I'll be back. Check out my opening call over the weekend. I'll be back Monday. Have a great weekend. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.